Are you seeking financing to purchase a residential rental property and want to know how much cash you'll need to close the deal? In this video, I'll provide the down payment requirements for long-term rental loans, also known as DSCR loans or term loans. I'll also explain how the rental income affects the down payment amount and one strategy that many investors use to minimize the down payment amount for long-term rental investments. I'm Butani, founder of PrivateLenderLink.com, where investors and brokers can easily find direct private lending companies. If you're in the investment real estate business and want to gain insights into private mortgage lending, subscribe to our channel and get notified every time we release a new video. Although private lending is mainly for short-term financing, many private lending companies now offer financing solutions to investors that purchase residential rental properties to hold for a long term. It's mostly for properties rented on an annual lease, but some lenders consider vacation rentals, and the terms range from 5 to 30 years. When financing the purchase of a rental property, lenders will not fund more than 80% of the purchase price. So the minimum down payment you'll need is 20%, and it needs to be liquid funds in your bank account. No lender will consider seller financing, gap funding, or other creative financing strategies for term rental loans. While 20% is the minimum down payment, many investors will have to contribute more than that to the purchase. Some lenders adjust the maximum loan-to-purchase price according to the borrower's credit score. For example, a credit score of 720 could mean the lender won't fund more than 75% of the purchase price, and the investor's minimum down payment amount would be 25%. A credit score of 650 could put the maximum at 70%, which means that 30% down payment would be required. An investor with a credit score less than 600 would likely need a down payment of 100%, because unlike with short-term bridge loans, the borrower's credit score is very important for long-term rental loans. While the credit score is a very significant element in determining the maximum leverage for a long-term rental loan, the most important factor is the DSCR, which stands for Debt Service Coverage Ratio. It's a calculation of the subject property's monthly rental income against the total of the monthly expenses, which includes the mortgage payment, taxes, insurance, and homeowners association dues if applicable. I'll make a separate video to explain the calculation in detail, but focusing on the down payment requirement, just realize that if the calculation result is less than 1, 1.2, or whatever the lender's minimum ratio is, the down payment amount will increase. If you're looking to acquire a residential rental property with a lower down payment of only 10 or 15%, the only way that's possible is if the property needs to be renovated, and the value increases significantly after the work is completed. It would have to be two separate loans, one for the purchase and renovation for a term of up to 12 months. Then the DSCR rental loan can refinance the short-term loan when the property is ready to be occupied by a tenant. Many of the private lending companies listed on our website offer both short-term and long-term financing to real estate investors, so use us as a resource when you're ready to acquire your next property. If you're purchasing a rental property that does not need to be renovated, click Browse Lenders from the main menu, look for the long-term rental button, then enter a state or major metropolitan city. Click on each lender's profile to learn about their rental loan program, then click the green contact button to find their phone number and a form to send them an email. To make your search more efficient, click the Create a Loan Request button to provide information about your financing needs, then invite lenders to view it. If you'd like our assistance, we can review your loan request and invite a few select lenders that we feel may be a good fit. Any lenders interested in funding your loan will reach out to you, and you'd work with them directly. If you found the content in this video to be useful, please click the like button, and be sure to check out our other videos about private mortgage lending. Thank you for watching, and see you in the next video.